Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. And today, we are taking a look at authID.
Yeah, and if you find our talks useful, please consider subscribing, liking, and dropping a comment underneath. It really helps us out.
So the deepfake crisis, it's not just a headline anymore, is it? It's a real multi-billion-dollar problem for businesses.
Especially in sectors where you absolutely have to know who you're dealing with. And you've pulled together a ton of research on a company right in the middle of this, authID.
That's right. And our mission today is to really distill all of that down. We want to find the three most crucial insights, the real nuggets that explain why this tiny company is suddenly seeing explosive growth.
And more importantly, whether its technology is a real, sustainable, competitive moat. So let's just jump straight in. Fundamentals first. Because the revenue numbers, they're still small, but wow, they tell a story.
They absolutely do. When you look at their health, you're seeing a company that's clearly, in that early high growth stage. Their total fiscal year revenue was just $886,000.
Right, under $1 million. But the trailing 12 months, the TTM number, that's where it gets interesting.
Exactly. The TTM revenue nearly doubled. It's up to $1.83 million.
That's a serious upward curve. And Q2 of 2025 was the highest revenue in company history. So that's not just a fluke, it's real acceleration.
It proves that demand for their core products, proof, verified, and privacy key, is really kicking in.
And specifically in those fraud-heavy areas, right? Like digital payments and workforce verification.
Precisely. But, and this is important, we have to be really clear about the cost of that growth. The TTM net income is a loss of $18.49 million.
And the ETS is negative $1.52. A lot of people see a number like that and they run. So why shouldn't they?
Well, because you have to ask where that money is going. It signals heavy investment.
Not just burning cash to keep the lights on.
No, not at all. This is capital being deployed into R&D, into building out the sales team. It's all designed to lock in high-value annual recurring revenue, or ARR contracts.
ARR is the magic word here. For anyone listening, why is recurring revenue so much more valuable for a company like this?
Because it makes them a platform, not just a one-off service. ARR gives you incredible visibility into the future. It lets investors value the company on a much higher revenue multiple.
But 5 to 10 times higher than a company just selling licenses.
Exactly. And the recent contract wins, that correctional e-learning deal, the global workforce contracts, they suggest this strategy is starting to work. You can see the scaling potential.
Okay, I get that the losses are strategic. But that strategy only works if you have enough cash to see it through. So they're betting that the upcoming Q4 earnings will show that growth is really taking off.
They're betting the house on it.
All right, let's get to the real differentiator then. The thing that makes this whole thesis work. The competitive moat. Why would anyone pick authID over, say, a giant tech platform?
One word. Privacy. This is the nugget you have to remember. Their technology is patented and it's privacy preserving.
And the accuracy is just insane.
Ridiculous. A 1 in a billion false positive rate, and it all happens in under a second. But here's the crucial differentiator. They operate with no biometric data storage.
Hang on. They verify you without ever storing your face or your fingerprint. How is that even possible?
It's their secret sauce. It's the solution to the deepfake problem. Think about it. If a hacker steals data from a competitor who stores that biometric data, they have the keys to the kingdom.
They can create a perfect deepfake.
But with authID, there's literally nothing to steal. The data isn't there in the first place.
That's not just a feature, that's a whole different business model. It immediately gets them out from under all those privacy regulations, like GDPR.
Instantly. And that's a massive selling point for a global enterprise.
Yeah.
It also creates the second part of their moat. High switching costs.
Once you're integrated, it's too painful to leave.
Exactly. Their IDX platform becomes the identity nervous system for the whole company. Ripping it out would be a nightmare, especially if it means taking on more regulatory risk with a competitor.
So, technologically superior, basically bulletproof product. And the market, it seems, has finally woken up to that fact. The chart action has been explosive.
Explosive is the right word. The stock surged almost 86% in 24 hours to $1.71.
And this was from a stock that was just sitting near its 52-week lows. That's a huge psychological shift.
A massive one. And the volume confirms it's real?
Yeah, let's talk about the volume. It just went vertical. Yesterday's volume was what, nearly 39 million shares?
38.87 million. And you have to remember, their average daily volume is just 1.28 million.
So that's almost 30 times the normal interest. That tells you both retail and institutional money are flooding in.
And it's directly tied to the news. that TurboCheck partnership and the recent awards.
We should also just quickly mention the beta 1.08, so it's slightly more volatile than the market, which in a momentum move like this can amplify gains.
And losses. You have to be aware of the volatility. But right now, the bulls are clearly winning. The quantitative sentiment is strongly bullish. We looked at 10 recent news items, 8 of them were rated bullish.
And we know which catalysts are driving that. Number one has to be the TurboCheck partnership, right? Tackling employment fraud. That scored a 0.875 on the relevance scale.
That's a massive validation for the market. It proves the tech works in a high-stakes environment. Then you add the external validation, like the Paytech Award for Privacy Key.
These aren't just fluffy press releases. They're third-party endorsements from different industries.
But endorsements are one thing. It's another when management puts their own skin in the game. And the insider activity here is really compelling.
We've seen a definite cluster of buying. Director Stephen Garchick bought $216,000 worth. That's over 126,000 shares.
And he did it after the Q3 loss was reported. That is a powerful, powerful signal. When you see directors like him and Michael Thompson buying in with their own cash, they're telling you they believe the tech will win out over the current cash burn.
Okay, let's get into some of the more speculative stuff. The unconfirmed rumors that could really add fuel to this fire, the Microsoft Entra alliance. Why would expanding that be such a game changer?
Because Microsoft Entra is, a dominant force in enterprise identity solutions.
Yeah.
If authID gets deeper integration there, they are suddenly leveraging Microsoft's massive customer base.
It's an instant sales channel.
It's more than that. It validates them as an essential component of enterprise security. It makes them a utility, and it cranks up those switching costs we talked about even higher.
That would definitely take them to the next level. And we're also hearing some chatter about a potential retailer digital ID win.
Which would open up the massive consumer payments sector. And maybe the most interesting rumor is that they're positioning themselves for an M&A exit.
As a takeover target, why would a giant buy them instead of just building their own version?
Time and risk. Building a non-storage biometric system is really hard, and the big players don't have time to catch up with the deepfake problem.
So they're buying a solution and a shield.
Exactly. They acquire the patented tech, and they shield themselves from the immediate regulatory headache of storing all that personal data.
Okay, let's look forward. For someone watching this now, what does the catalyst calendar look like for the next 3 months?
The immediate focus is Q4 earnings. That's likely coming in February 2026. This is where the rubber meets the road.
The market will want to see hard numbers on how fast those new deals are scaling their ARR.
The growth narrative has to be backed by data. Beyond that, you're watching for more partnership announcements coming out of industry conferences.
And the macro environment is helping here too, isn't it?
It's a huge tailwind. The rise of AI and deepfakes is forcing capital into this sector. And a more stable interest rate environment helps microcap growth stocks in general.
But we have to give the balanced view, the bear case. We can't ignore the risks here. What's number one?
Dilution. It's always number one. That $3.7 million offering bought them time, but it came at a cost to existing shareholders. If ARR growth slows down, they'll have to go back to the well.
And risk number two is directly tied to that.
Absolutely. The persistent losses. That $18.5 million TTM loss is a real threat if the growth story stumbles. This whole play depends on them scaling to profitability and fast.
And context is key here. When you weigh those risks against the moat, the insider buying, the new contracts, it feels like those risks are mostly priced in at a $37 million market cap.
I'd agree. The risks are known. The catalysts are new. The burden of proof is now on execution.
So let's bring it all home. What does this mean for the wealth builder looking at authID today? What's the final thesis?
The bullish score is a strong 8 out of 10. The elevator pitch is simple. authID's privacy-first biometrics are a unique solution to the deepfake problem in critical sectors. The TurboCheck win validates the tech, and the recent cash injection gives them the fuel to scale toward profitability.
So what's the time frame? How should someone approach this?
You have 2 real options here. You could play it as a swing trade into the Q4 earnings in February, riding the current momentum. Or, and I think this is the more compelling play, you could see this as a multi-year hold. You're positioning for a potential 5x upside as this whole AI identity sector just booms.
A compelling, if volatile, growth story indeed. Thank you for sharing your analysis with us on authID.
Of course. And this does raise a really important question for the long term. Their whole model relies on their patents. What happens when a tech giant decides to acquire a competitor and just tries to engineer a similar non-storage system, trying to design their way around authID's intellectual property?
That is a challenge that will definitely keep us watching this space. Thank you for listening. We'll see you next time on Smart Wealth with Joshua.